It is almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. Tech leading gains in Asian equities as the Nikkei 225 tops 40,000 for the first time. Investors now awaiting Jay Powell's report to Congress for updates on the Fed's rate outlook. Adani Group begins marketing a $400 million bond, its first dollar note since last year's attack by short seller Hindenburg Research. And we're live in Beijing, where China's most important political gatherings of the year are about to begin, with leaders set to unveil their targets and strategies for reviving the economy. It is a big week for markets. It is about China. It is about the U.S. They will set the tone for the coming days, of course. For the China, it is about indications from the government in terms of policy stimulus to lift China out of the quagmire, economic quagmire, those deflationary pressures, GDP target front and center. Will it be 5%? Could it be below 5? Some say unlikely, but we wait and see in terms of where that target would be. Of course, it is also about the Fed. We have Fed Chair Jerome Powell set for his testimony, expected to reiterate the Fed is in no hurry to cut rates, is likely to lean towards a hawkish tone. We've heard from many Fed officials saying that, you know what, the Fed can afford to wait given the data. They've been strong. Inflation remains sticky and the economy remains pretty resilient as well. So the Fed, as well as China, expected to dictate the sentiment in the market this week. We're also keeping an eye, by the way, on Thailand, on India, as it sets to join the trading day in about 44 minutes. Let's take a look where we are in terms of the SET, currently up by 0.3%. Of course, this is a market that's been lackluster, one of the worst performers in Asia year to date, down 3% on the year. The Thai baht also has been under a lot of pressure, but today gaining somewhat, a tenth of 1%, 35.805 versus the USD. And in terms of Indian futures, pointing to a higher open, up by 0.3%. Adani shares in particular in focus. It has kicked off the sale of its Adani Green 18-year dollar bond, its first dollar bond since that Hindenburg report. Let's do a check on where we are in terms of those Chinese assets ahead of the NPC that's happening starting today. China assets looking pretty cautious, swinging between gains and losses. Bear in mind, they've been rallying in the lead up. In fact, China stocks were among the biggest gainers in February alone. The question really is, will NPC reveal big enough bazookas, big enough in terms of stimulus and policies to drive them higher? China's yuan trading at 720.98 versus the USD flat, pretty much supported by the PBOC. The Hang Seng Index up 0.2%, bucking those losses which we saw just last week. Let's get more on what to expect from China this week and bring in our Chief North Asia correspondent, Stephen Angle in Beijing, as well as Eric Chu from Bloomberg Economics and our very own Asia equities reporter, Charlotte Yang in Hong Kong. Steve, let's start with you. What are you hearing? It is a big week for China.
Yes, it is. And I think that GDP target that we'll get from Premier Li Qiang's work report tomorrow morning will be indicative of the level of confidence, of course, authorities have in the economy going forward. Obviously, it's been a very difficult 2023 with multiple shocks, whether it's property, obviously, consumer confidence, the external situation, and the like, has sort of cast a pall on the prospects for the economy. We did see the national team come in February, prop up some of the equity markets, which were slumping, obviously. And also during the Lunar New Year holiday, which was in February, we saw, tremendous spending by consumers as they traveled. But you have to take that with a grain of salt because, 2 weeks of travel spending during the Lunar New Year holiday, also known as the Spring Festival, does not necessarily mean it's going to be a year of bumper spending by consumers. So we have to kind of go forward and see. So that work report is coming from Liqiang tomorrow, and most economists expect, again, a repeat of the same target of around 5% GDP growth. If they go lower than that, that is not a very confidence boosting sentiment. If they go higher, well, you know what that means, that they're pretty confident that they can get some growth. But how are they going to find that growth? Are they going to, open up the fiscal taps and spend more like they've done in years past? So far, the leadership has not done that. Xi Jinping has repeatedly said he wants high-quality development. He said that 128 times in 2023, double that of 2022. So while they're de-risking, deleveraging, they don't want to exacerbate those debt issues in China.
Steve, talk to us about the sentiment on the ground. We've seen unusually protests from the Chinese people. I mean, there's a sense that perhaps communication has been lacking. They're unsure how, Xi Jinping's views and visions will be materialized.
Yeah, so, I mean, I can give you some anecdotal evidence, and the people I've spoken to over this weekend here, everyone says clearly the economy is not doing well. They also want clear signs from the government that they're going to be doing something to help their situations. Obviously, at the core of that is property. The property market has absolutely hurt people's paper wealth, their household wealth, obviously, and their confidence. And the deflationary environment, 15 consecutive months of deflation and wholesale prices at the factory gate. We've had, 4 or 5 months now of CPI deflation. So there's a worry, obviously, that there's policy disconnect, if you will, going forward. One person told us essentially that they're looking from their leaders for a sense of hope. So that's anecdotally what I'm hearing. The data also suggests that the private sector is not spending. They're not confident right now of this recovery. And 60% of national GDP comes from the private sector. 80% of urban jobs come from the private sector. And it's been a very rough 3 years through COVID-0, through the crackdown on the big private enterprises like Alibaba and other tech companies. Very difficult last 3 years. So confidence might take some time to recover.
That's right. And Eric, realistically, what can be expected from these meetings? I mean, expectations are so high, the room for disappointment is as high.
Yeah, I think as Steve mentioned, obviously the most important thing is what's the growth target for this year. But I think now the market quite has a consensus, including us, that the target will probably be around 5%. But remember, 5% this year is still harder than 5% last year, given last year was boosted by the lower base during COVID-0. So I think 5%, even we have the same target this year, that will still mean the government has to do more, to achieve this target. And that means another thing we want to watch is the fiscal budget target for this year. We would expect some higher headline number, but if you consider those unspent money from last year, actually the de facto to overall spending of fiscal should definitely be much more this year. And we think the government will also focus on, stress spending the money as quickly as possible and as early as possible. Try to avoiding the lagged spending, what we saw last year, which kind of will drag the growth. So I think that's some key points we want to watch for this year. And also, as she has already mentioned, the high quality growth, that's another thing I think important for the market. So are they going to tell any specifics about what's a high quality growth, what's the area they want to promote? The property now is the past, but we are looking forward to what's the new growth engines for China going forward.
Eric, in terms of policy tools, what is China likely to tap? Structural reforms, fiscal stimulus, and if it is fiscal stimulus, how big a bazooka can it be? Because China has been pretty conservative in doing that.
Yeah. I think unless they set a much higher target than 5%, we don't expect, see a bazooka of stimulus. So if they only want to achieve 5%, I think the stimulus will still be incremental, step by step, and depending on the market conditions. But in any case, achieving 5% target is much harder this year, so they have to do more than last year. But we don't think they will do as much as a bazooka type of stimulus the market. Some of the market investors are expecting.
Charlotte, let's turn to the equity markets, up 3 weeks in a row. The big question is really whether those gains can be sustained. What are you hearing? What is needed for that?
Yeah, so I think front and center what market wants to see, out of this big meeting is how are the authorities assessing, the level of risk when it comes to property, what kind of financing support will come on that front, both for the supplies and also demands, and more importantly, what kind of development models China sees for the property sector. And they also want to see more clarity when it comes to, this term high quality growth. What are the key sectors, if not property, that will come out? Will that be EV? And if you're looking at the trading today, this morning, is quite muted, quite cautious. But interestingly, if you look at the property stocks, the consumer stocks, they are actually the top losers for the onshore market. So I think that shows even though investors want to see those things happening, they are not currently positioning that much. And today, leading the gains is still largely the AI plays as well as the healthcare names. So I think investors are closely watching what will happen tomorrow.
Right, and Charlotte, the big question is really whether or not foreign investors are back. Some say they've started dipping their toes since the start of the year. What are you seeing in terms of foreign appetite?
Yeah, so I think sentiment for the Chinese stocks has improved a lot since January. If you remember, everything that's happening with January, you've got structured products blowout, and then also a lot of liquidity prices. But right now, with national team taking a stronger support, and also with securities regulator, sentiment has improved. But as Morgan Stanley has put it, what they see is that the foreign fund outflows from Chinese that kind of pressure has stopped, but it will take more time when we see a meaningful inflows coming back in. And I think if you want to see long-only funds, especially foreign investors, coming back into this market in a meaningful way, then they will need to have more clarity in terms of China's longer-term planning, in terms of economic growth, as well as what will happen with the property sector going forward. And all of those signals will have to come out from the meetings this week.
And Steve, just one final question before we let you go. We know you've covered China for the last 20-odd years. Is this NPC meeting different from the other NPCs you have covered?
It's not different in structure, obviously. I mean, this is a pretty regimented affair and pretty much spelled out. Some have called it in the past a rubber stamp body, but it's probably more critical right now because of the size of the Chinese economy and the role that China plays in the global economy, and also at a time when China is facing multiple headwinds from multiple different fronts, not only economic, which we just ran through with property, the private sector and the like, but also geopolitically. So that's another number we'll get tomorrow, the budget deficit, the military budget, I should say. And that will kind of give an indication as well of how important national security and internal security as well as outward security is to the Chinese leadership, which we all know that Xi Jinping has put an emphasis on security. So, I wouldn't say it's any different, but the stakes are probably higher now that Xi Jinping last March at the NPC secured his precedence-busting third consecutive term as president. That after the party congress the previous autumn, where his chairmanship of the party, the general secretary of the party, was also secured for a third consecutive term. So he has taken on a bigger role, obviously an outsized role, if you will, for a leader in China, at least in comparison to the last several decades after Mao Zedong. So there's more responsibility on him and his team of loyalists, including Li Qiang, the premier, who will deliver his first work report tomorrow as premier.
all against a very challenging backdrop. Our Chief North Asia correspondent Stephen Angle in Beijing, along with Eric Chu from Bloomberg Economics and Asia Actors reporter Charlotte Yang in Hong Kong. Thank you so much for your insights. Now, still to come, we speak to the chairman and CIO of one of Asia's largest independent wealth managers for his outlook for markets. And later, we check on India's appetite for travel with Clear Trip and the destinations that are proving most popular. And we're leaving you with NASA SpaceX crewed mission launch set for 11:53 in Hong Kong. That was delayed, of course, from yesterday, initially slated to be launched. Crew 8 consists of 3 American astronauts and 1 Russian cosmonaut. We'll bring you details very shortly. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. Here's a look at the week ahead. China's National People's Congress begins on Tuesday. Officials are due to unveil the nation's growth target for 2024, which will set the tone for government policy for the rest of the year. We're also watching for inflation numbers out of Japan, Philippines, South Korea, and Taiwan. It remains inflation. Fed Chair Jerome Powell will deliver his semi-annual monetary policy testimony before Congress this week. The event is expected to provide markets more insight on the U.S. Central Bank's rate hike policy. Of course, you've heard from many Fed officials saying they are in no hurry to cut rates. And on Thursday, President Biden will be delivering his State of the Union address. We'll have special coverage here on Bloomberg TV. And the ECB set to hold rates steady as it awaits more evidence that inflation is under control. So lots to digest, lots to watch out for. Let's get more on markets with Samuel Rhee, Chairman and CIO of Independent Wealth Manager Endowus. Good to have you with us, Sam. For the moment, though, it is about China, right? How crucial is it, or has everything already been factored in? We saw 3 weeks of gains for China.
As I think many people have been commentating, it is a huge week for China. I think there is growing expectations, and that's what leads to markets rebounding. Whether this is the dead cat bounce or whether this is the bottom of the market and we'll start seeing this rally continue and have some legs, we'll have to wait until the announcements come out. I would err on the side of caution and say that, I don't think there's going to be anything that's going to be really surprising on the upside. And so the expectations are likely to be either met or will be disappointed.
So where does China go from here? Can it sustain that rally? Because that's based on expectations that China will see the stimulus, will see rate cuts in the coming months.
So there are a lot of headwinds that are structural, and we know these things now, and whether these are priced in, I think, is the most important thing. The valuation suggests that, yes, it is very low, and many of the negatives we are very familiar with now. We've talked about it endlessly, so maybe it is priced in. Now it really is up to the government, because for China, the government's actions and its policies and its rhetoric, I think, is going to be very, very important for sentiment. And that's what we're really talking about, because sentiment is really bad. I talked to my friends in China, and they're talking about that there is no hope, which is a very strong word. It's a very deflationary word, which China is in. And I think it reasserts those kind of structural problems. And we need the government to come out with a strong messaging, whether it's through fiscal stimulus or monetary stimulus, or with a strong growth target. I think they'll be limited in trying to do that, but let's hope.
Even though some say there is no hope, others argue that we've seen the worst for the Chinese market. Would you be adding your exposure to China over the next 12 months? What do you anticipate doing, Sam?
Yeah, I mean,
put your neck on the line.
I think if you're a contrarian investor, I do have a contrarian streak, so I'm always interested in things when there's value and when things are going badly. Especially when sentiment is so bad, that's when you start looking at these interesting asset classes. China equities is that asset class, just like China bonds were maybe not last year. And so there is, I think, interest in that sector, but I think we still have to see more stronger, sustainable, I think, good news.
Chinese bonds, they've gone gangbusters, among the best performers. That's on the premise that those rate cuts are coming.
Yeah.
Do you see that happening?
I think that's one area where maybe the market has run ahead of itself a little bit. I think the China interest rates and monetary policy is beholden to the Fed. And I think the fact that the Fed is not going to change its rhetoric, Powell I don't think is going to change its tone, and the Fed is not going to change its tone this week. And therefore, it's unlikely to see significant sentiment boost on that front. The Chinese government and the central bank will not be able to move before the Fed, I think, because of capital flight risk. And therefore, if that is the case, then I think the expectations of rapid interest rate hikes will probably diminish. Nevertheless, I mean, China bonds were priced for failure in many sectors in that asset class, and therefore there is a case to be made that the valuations are attractive enough for investors to go back in.
On the other hand, the Nikkei 225 breaching 40,000 for the first time. Wow, what a run.
Yeah.
And what a turnaround for Japan, right? I mean,
absolutely.
Are gains sustainable? Where does it go from here?
Yeah, I think there is a lot of positive sentiment and maybe a little bit of exuberance, but there is enough legs, I think, in the market. I think there's enough earnings. The economy is looking good, capital expenditure and consumer recovery. I think a lot depends on this wage negotiation season. If that goes well with a 3.55% kind of increase, then the BOJ will normalize rates, which is positive. They'll be done with that, and they'll continue to maintain a relatively easy monetary policy that may fuel continued market upside.
So BOJ will move in March or April?
Either way.
And what happens to Japanese assets?
Well, Japanese assets look good despite what they do, because I think it's one rate normalization and they're done. It's not a continued tightening of monetary policy, and I think they're fine with the currency remaining weak to support their export base, and domestic demand will be supported if only wage increases can be secured.
But the thing is that the weak yen has been mind-boggling of sorts in a way, especially with expectations that the BOJ will exit negative rates.
Yes.
Can the yen see a boost if the Fed were, if the BOJ were to come through with what's expected of it?
I don't think so. The rate increase, one rate increase is not going to change the tone. I think it is the rate differential with the US dollar, and the Fed's actions will determine where the yen will go rather than what the BOJ does.
All right, we wait and see. Always wait and see, Sam. Thank you, Sam Rhee and Dao As. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. China markets just heading to lunch, and you're looking at live pictures out of Beijing. Traders bracing for that annual two sessions, what they call Liang Hui, a preview of government's policy agenda for the year ahead. The CSI 300 index has been swinging between gains and losses. This meeting is especially important, of course, as China's trajectory has never been more uncertain. The people inside as well as outside are looking for assurance as well as clarity on the path ahead for China. The focus really is Beijing's assessment and planning to counter the issues of deflationary risks, eco-headwinds, as well as an aging population. CSI 300 again, eking out some gains in the lead up to that event. Flip the page. Take a look where we are in terms of Japan as it comes back from lunch. We have the Nikkei 225 breaching that 40,000 psychological level for the first time ever, 40,169 at this point in time. Global investors have been pouring into this market in particular, and tech shares have lapped the gains. The likes of Tokyo Electron, the gains in the past year have seen Japan becoming one of the best performers in the world. The Nikkei supported also by the weak yen, but with expectations of the BOJ making exit from negative rates, well, we could see a boost to the yen perhaps. Currently, the yen versus the USD at 150.14, a level it's maintained for quite some time now. The TOPIX is flat at this point in time. Now, let's stay with Japan. The Japanese government is reportedly discussing whether to officially call an end to the country's period of deflation. Let's bring in our senior Japan economist, Taro Kimura. Taro, why would an official government call be significant?
That's if the government declares Japan is no more in deflationary state. That's a very epic. That's going to be a very epic moment. So Japan declared it has been in deflation since March 2001, and it's kind of a banner for the government and the Bank of Japan to like conduct aggressive fiscal support and easing of monetary policy. And particularly for that really means for the Abenomics. So the declaration is the country's finally in inflationary state. It will be not only like sentimentally epic moment, but also for the policy as well. So basically. What Japan had been was, for example, corporate literally don't know how to change their price tables, but now faced with the global inflation, they're doing now. So I think dropping deflation again, that risk is very low. So that's why I think the government is also mulling the declaration of deflation is over.
Taro, in terms of inflation, how are officials assessing Japan's current inflation momentum? Is it sustainable?
Right. Japan is no more in deflation, and I agree that Japan finally acquired kind of steady and mild inflation at least, but not sure whether Japan actually secured like 2%, the BOJ's target inflation. Because the consumption is still weak. We are not sure how the wage growth will be in the next fiscal year starting from April, because most people paid their attention to spring wage negotiation and labor unions negotiation, but at the same time, it's only about less than 20% are in the labor union. That means in order to confirm the wage growth is pervasive, the officials has to wait until the macro data for wages and prices. So I think that will creating some obscurity about when the BOJ and probably the government will think that the inflation, particularly the 2% inflation, will finally be secured. I'm skeptical a little bit under the status quo.
Well, Taro, all eyes on the BOJ. It's been on the BOJ for quite some time. How could this play into the BOJ policy decision later this month?
Right. Obviously, so the important thing is the report doesn't say when the government will declare the deflation is over. However, obviously, if the government does that, that will make the BOJ's life easier for making a policy pivot, because I think they are communicating closely. And they kind of try to move in tandem. So if the government declaration happening very soon, that will also endorse the BOJ's pivot early. But I'm not sure when that will happen. The jury is still out, I think.
You're right. The jury's still out. Our senior Japan economist Taro Kimura, we thank you so much for your insights. Now, global markets are closely watching China's NPC for fresh policy direction for an economy facing turmoil in its property market, weak consumer confidence, persistent deflation, and geopolitical tensions. Bloomberg's chief North Asia correspondent Stephen Angle outlines the priorities at this year's 2 sessions.
Early spring's crosscurrents in Beijing can be tough to read as China faces a host of economic headwinds ahead of the annual session of Parliament, the National People's Congress. With property market turmoil, poor consumer confidence, persistent deflation, destabilized geopolitical ties, along with plummeting FDI, and a rocky stock market, simply put, it's not been a good first year for President Xi Jinping since taking a precedent-busting 3rd consecutive term last March.
The economy is still tough, slowly recovering, but I think the confidence has not come back.
So far, state-directed funds have mobilized to stabilize wobbly markets, while Beijing replaced the head of the securities regulator and cracked down on so-called malicious short selling. Banks, too, eased a loan prime rate tied to mortgages, and consumers came back and spent mightily. During the week-long Lunar New Year holiday, the best set of Spring Festival numbers since pre-COVID. But was it all enough to turn the winter bears into spring bulls?
2023 has been an unfortunate confluence in China of deflation and de-risking. I think this year the policymakers want to go back into reflation and hopefully reform.
In terms of the ability of these measures to really change the market sentiment, we are slightly more cautious because what's really needed is a change in the inflation outlook for the country and the overall sentiment in the private sector.
You've got sentiment which is rock bottom, and at the same time, I think the issues of policy credibility in the market.
The growth engine remains one where it's more, let's say, government-led, infrastructure-led, manufacturing and investment-led. And those might help to get to the growth target. But in terms of the more dynamism and the more sustainable type of growth, we think it still needs some work.
So the attention now, as we're here in Beijing, turns to Premier Li Qiang's work report on day one of the National People's Congress.
Instead of looking for more candies from the government, we really want to say, can we actually go back to more like what China started in its reform back in early 1980s? Is more, allow the private enterprises, entrepreneurs to the right incentive to really to do things, the freedom.
Wishful thinking, perhaps, for global investors who got burned by multiple stresses on China's private sector, including COVID-0 and a regulatory takedown of big tech.
We've been out of China for a long time. We essentially started getting nervous about China when Jack Ma was hauled in, so that was in 2020, a very long time ago. And for the past year and a half or two, we've had no exposure to China, none whatsoever.
The world is watching Beijing's next policy move, perhaps at the NPC, with great interest. Stephen Engel, Bloomberg News, Beijing.
And this NPC is especially important. And we've been hearing from guests this morning from our new program, The China Show, about what to expect from the meetings.
If they actually say something a bit more firm, like really we're going to get to 5% no matter what, then you would expect a lot more stimulus than last year because it was such a low base effect last year, right? If they are a little bit more flexible or they even go lower and say 4.5%, then you know that they're going to focus on things more like national security and stability rather than economic growth.
Growth targets, everyone's so focused on that. I guess we're not too different from consensus when it comes to the actual numbers. So we're looking for around 5% growth for 2024. And the other big number, of course, is fiscal deficit to GDP ratio. We're looking for above 3%.
China has passed the stage where they want to throw a lot of money, build a lot of leverage just to achieve a 7%, 6% GDP growth.
That's right. For all things China, catch the best analysis of everything China on Bloomberg's The China Show. It's your definitive source for news and views on Asia's largest economy. From politics and policy to tech and trends, we'll have in-depth discussions with the newsmakers who matter every weekday, 9 a.m. in Hong Kong, Shanghai, as well as here in the Lion City. Well, still to come, travel booming in India. We discuss the opportunities and challenges with one of the country's fastest growing travel firms. Clear Trip's Chief Business Officer will be joining us next. Keep it here with us. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching India Focus. And India starts trading in just under 4 minutes, and it does look like it is off to a positive start. Sensex up about 0.1%. Of course, investors say Indian equities can keep that rally going. They say after the big beat for GDP, which we saw recently in excess of 8%. The rupee trading at 82.86 versus the USD, flat versus the greenback. And here's a look at Adani Group stocks ahead of the open. Sources say Adani Green Energy and related units are offering the group's first dollar bond since the Hindenburg crisis last year. And pre-market is looking like a green day as well. Adani Green up 0.3%. Let's delve deeper. PR Sanjay, Bloomberg reporter and conglomerates, media and telecom, joins us from Mumbai. Sanjay, tell us more about this bond.
Oh, this is the first time, first dollar bond issue since Hindenburg has hit the conglomerate with allegations which Adani Group denied. And what this would mean is, they have gained confidence after the Hindenburg issue. They have got nearly 5 billion from overseas investors, including GQG and other investors. And this is kind of reinforcing or reinstating their back with the bank. And they are telling that they're getting great inquiries from investors and warm welcome from the investors community, and they're holding road shows, and they're telling that the reception is like really welcome, and they're thinking that Hindenburg is matter of past and there's no more concerns, and they would also hit the market with more such offerings. This is giving more confidence, and they have come out with a compendium report in between to reinforce how, or to rather market this green bond dollars. They are saying that their cash levels have improved, they have a better debt equity ratio, and they would be hitting the market with more such offerings. That's what we're picking from those sources at Adani conglomerate.
Sanjay, truth be told, it's not really about the bond, is it? It's really about that pre-wedding party. The Ambanis kicking off a lavish wedding celebrations on the weekend. We know that Zuck was there, Bill was there, Rihanna was there, but you weren't. But can you tell us more about it?
But to give a connection with the green bond offering, Gautam Adani and his family was also invited for 3 days for pre-wedding bash, and this like talk of the town. People are still not digesting. There was series of videos. There were truckloads of photo hands out being distributed. People are still watching and staring at photographs of which is surfacing and on social media and various Instagram handles of Mukesh Ambani, Neeta Ambani, and Rihanna posing with the airport staff, and she was not hesitating to pose with even photographers and airport security staff, etc. Brilliant scenes, and almost all from Bollywood stars, like for example Shah Rukh Khan, Salman Khan and Amir Khan, all three sharing a stage. And very interestingly, there was some emotional videos where Anand Ambani was discussing, and father Mukesh Ambani was like sobbing after listening to his son. And this is also kind of a building profile for Anand Ambani. Ahead of pre-wedding bash, he has also opened the animal rescue center, and where he has put in his passion for him. And to be very interestingly, Neeta Ambani was telling that she always wanted to have this wedding at the roots, or pre-wedding bash at the roots, where they have built the empire, which is Jamnagar. And of course, there's nothing to do with the roots and cultural legacy, but Rihanna was also there. That is really give a lot of momentum across the globe, because Rihanna performing at an Indian wedding, that too Asia's richest man, was indeed interesting.
And of course, we hear that she was paid anything between $5 to $9 million. Big sum, but we can't confirm that. Sanjay, thank you. Now, India's annual budget released last month included plans to encourage states to develop tourist centers and market them at global scale, including long-term interest-free loans. Let's discuss this and more with Pralan Krishnamurthy, Chief Business Officer at ClearTrip, one of India's fastest-growing online travel tech companies. Good to have you with us. Give us a sense of the kind of growth we may likely see.
So thanks for having me on the show. I think the Indian tourism and travel market has bounced to almost pre-COVID levels. In fact, it's crossed it as well. It's a $50 billion opportunity, and the kind of scale it's going to reach over the next 3-4 years is quite noteworthy. So we expect almost a 14% CAGR over the next 3 years. There are almost 1,000 plus aircrafts which have already been pre-ordered. There are 25,000 rooms which are still being built as we speak for hotels. So overall, the market is looking quite bullish from a tourism standpoint.
In terms of trends, what are you seeing? Where are Indians traveling to within the country, outside the country, and what are you anticipating?
The domestic tourism has picked up quite a bit, but while that has boomed quite a bit, we also have a lot of these visa-free destinations across India, which is doing very well. So you have traditional countries like Dubai, Singapore, Thailand, which continue doing well for Indian tourists. But we also have Sri Lanka, we have now Malaysia, we have Philippines, Vietnam. All these are kind of picking up, Nepal as well. So all these are doing quite well. But as we speak, you also have a huge boom of domestic tourism in India. The Indian government has been very bullish with respect to promoting multiple tourism destinations. There are almost 76 tourism circuits in India, multiple pilgrimage destinations as well. So overall, yeah, quite a healthy story.
In terms of the spending patterns, what are you seeing when you take a look at the markets at record highs? We had GDP in excess of 8%. So you do get a feeling that the Indians are richer now. Is that reflected in the kind of spending we're seeing when they travel, whether domestically or abroad?
So the biggest cohort which has started doing really well is families. So families, I would say the kind of expenditure that they're doing on travel is doubled from last year. It's almost the number which we have is 102%. And you also have them experimenting lesser known destinations as well. There is also a lot of road trips involved. There are a lot of homestays. So overall, yes, very, very bullish from a family standpoint. The second biggest cohort is also budget travelers. So budget travelers also are growing by almost 80%. There are people, backpackers, homestays, more road trips. Yeah, overall quite interesting and quite bullish. Yes.
So Pralan, how are you capitalizing on that? Are you planning to IPO, raise funds in any way?
So currently, the way we are trying to capitalize on this market is we are doubling down on two big pillars. One is the fact that even though travel is, you could say, a very good experience, there is unfortunately a lot of uncertainty and anxiety around it. So we at ClearTrip are definitely trying to remove or introduce a lot of flexibility for our customers. So we're one of the few portals which allows you to swap airlines potentially, swap timings at very, very minimal cost. So you don't get hit with huge cancellation fees. We're also trying to push heavily on make travel affordable. So if there is a particular person who's going to go out for the first time, are we enabling that person to go to Thailand or make their first international trip? How are we helping them split their cost across 3 or 4 EMIs potentially? So yes, we are looking to capitalize. That is our strategy. Currently, we are a privately held firm, well backed by Flipkart, who's backed by Walmart. So that kind of continues.
Prahlad, just quickly, IPOing this year or not? Will you IPO this year or not?
ClearTrip individually, no. There is still a lot yet to be built. So we are still on track to kind of build a lot over the next 2-3 years. And we will see after that.
Okay. Prahlad, thank you. Prahlad Krishnamurthy, ClearTrip, plenty more ahead. Keep it here with us. This is Bloomberg.
H2 lock close.
And we're taking you to the Kennedy Space Center. It is about 2 minutes to launch. It is a go for SpaceX and NASA's mission to the ISS after it got delayed by elevated winds on Saturday. It was initially slated to be launched. Crew 8 consists of 3 American astronauts and 1 Russian cosmonaut. Now, SpaceX's Dragon spacecraft Endeavour is atop a Falcon 9 rocket. It is set to fly in a northeasterly trajectory. We know that the rocket's first stage booster will target landing at Florida's Cape Canaveral Space Force Station 7 minutes 38 seconds after liftoff, generating sonic booms in the nearby area. Now, this will be the 5th mission for the Dragon capsule Endeavour, the most for any SpaceX aircraft. A minute to go before that launch. How exciting it is. Once on board the space station, the crew will perform a variety of operational and scientific tasks. Now, we know that Elon Musk's SpaceX has been providing astronaut launch services for NASA since 2020 under NASA's Commercial Crew Program. And we also know that there is a rival program by Boeing that is called Starliner, but that has yet to get going. That means SpaceX remains the only commercial spaceflight company capable of sending astronauts to space. Again, if you have just joined us, we're waiting for that launch, SpaceX and NASA's mission to the ISS after it got delayed on Saturday. SpaceX developed several prototypes ahead of flying the Crew Dragon to space. Well, we're counting down to that liftoff. Take a listen.
4, 3, 2, 1, ignition, engines full power, and liftoff of NASA Crew 8. Go Falcon, go SpaceX, and go NASA.
Endeavour ascends, a beacon of human ambition. 1.7 million pounds of thrust now propelling Falcon 9 and Crew 8. Vehicle is pitching down range.
nominal power and telemetry.
And we are getting good call-outs on propulsion. Falcon 9 engines now throttling down to help pass through the period of maximum dynamic pressure.
Falcon 9 is supersonic.
With that call out, we know that Falcon 9 is now moving faster than the speed of sound.
Stage 1 throttle up.
1 Bravo. So with that call out,
Copy 1 Bravo.
we know that Falcon 9 is throttling back up. And
Falcon 9 and Crew 8 lift off there. Faster than the speed of sound. Imagine that. Of course, the rocket's first stage booster will target landing at Florida's Cape Canaveral Space Force Station 7 minutes 38 seconds after liftoff. That's what we're waiting for. Take a look at that. Such a fascinating sight to see. And, of course, we leave you with that vision. That is it. From Bloomberg Markets Asia, Daybreak Middle East and Africa is next. Keep it here with us. This is Bloomberg.
then the Merlin vacuum engine on board the second.